welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on environmental ESG, and my guest is Mike Hanson, Senior Vice President of Research at Fisher Investments. The United Nations issued a stark warning on climate change this week. Without rapid and large-scale cuts to greenhouse gas emissions, temperatures will reach a catastrophic degree of global heating in the next 2 decades. Much of that change is already irreversible, the report said, as the world heads towards 1.5 degrees Celsius of warming. Flooding and drought have already increased in more than 90% of the regions for which there's data, and more hurricanes and fires are inevitable, according to the report. But the scientists say it's not too late to stop the heating at 1.5 degrees. Well, there is widespread agreement on Wall Street that a move away from fossil fuels will happen. Look at the share price of Tesla, for example. But investing in clean energy hasn't paid off in 2021. This is the S&P Global Clean Energy Index. It's down nearly 18% this year and more than 30% from a January peak around the time President Biden took office. Clean energy, of course, isn't the only way to invest in going green, but with a multiplicity of different standards used to assess companies' carbon footprints, ESG can be hard for investors to navigate. So how can your money go green? Let's ask Mike Hanson, Senior Vice President of Research at Fisher Investments. Hi Mike, thanks for joining us. Now, there's no ignoring ESG concerns now, is there? So how is regulatory change going to impact even those investors who think they're not interested?
Well, Elena, I think that's a great question because it's not really a question of level of interest. This trend is real and it's big. By my estimate, there's over $35 trillion worth of assets being managed under the rubric of ESG investing in some kind or another. So investors need to know about this. And I think that's what really matters is instead of thinking of this as a category of investing, think of it as a new source of information, as you would have any new source of information investing over the decades. A good example of this is just talking about emission standards, as you were just saying. Emission standards will change a lot over the next 10 years. I think most investors will agree that. It'll change by different degrees, though, in different regions of the world. An investor who has materials, utilities, energy companies, industrial companies, even tech, are going to have their supply chains changed by all those types of regulation. If you're an investor that doesn't understand that, you may not understand your own investments. So this is a vital category. People need to pay attention to it.
I mentioned that clean energy has actually fallen since President Biden took office after running up beforehand. It seems that investors priced in a lot of upside for companies focused on greening the economy, and they haven't necessarily seen that yet. Is it going to come down the line now that the budget package and infrastructure bill are moving forward?
Well, first of all, yes. I mean, I think that sentiment probably in the short term has gotten a little bit ahead of itself, and ideas about euphoria or sentiment overshoot in any investing category is typical. It won't be any different for ESG than it would be any other type of category. In fact, ESG investments of any kind are going to be subject to the basic cycles, the corrections, the bear markets, the leadership changes. You need to be ready for that. And in fact, because markets tend to price into the future, let's say 12 to 30 months in terms of what future economic action is, investors are either going to have to be very patient or have to understand where they're at. The future is an uncertain thing. And so what I see a lot in ESG investing is, as opposed to going towards basic discipline investments, I see people going towards whatever the next big thing is. But the problem with the next big thing is it could take a long time to play out, and the world may change a lot in between. So you have to stay up with the news flow, but remember that all the typical market cycles and events will still affect your investments.
Now, assessing the environmental credentials of an investment and the different standards that companies are complying with requires some homework, doesn't it? So how can investors pick out what's a good ESG investment and what's not?
First of all, start with your goals. It has to start with you because the investor who is seeking to maximize their profits by way of this new information source has a different set of goals and therefore a different set of tactics than someone who may be simply asking, how do I maximize, yes, my return, how do I get a good return, but also how do I ethically source the investments the way I want to? Those are different goals, and you have to know that about yourself. Next, as you start to consider information sources, because there are a lot of them out there with just a basic internet search, you'll see them, understand that things like ratings of ESG companies are a lot like bond ratings. They're good sources of information, but they don't necessarily tell you how the investment will perform or whether it will perform at all. Next, I would say be very careful about fraud. This is a new investing category. There will be people who commit fraud in this area. In our industry, there's something called greenwashing, which is the idea that it may look like an ESG investment, but in fact, they may not be doing very much. You're going to have to do your homework and look at all of that. And finally, though, I would say make sure you continue to diversify. ESG is not a singular category. It will paint itself across almost all types of assets that you need to know about. And focus on materiality. Don't go for the big moonshots, but think about, are these companies that still have revenues and profits that are reliable that you can see today, and they have a good stewardship into the future for continuing that prosperity? Lastly, be conscious of cost, as you would for any other type of investment, because new types of investment categories often carry slightly higher costs than what you can normally get, and costs certainly do impact investment returns.
And finally, I know this is about much more than stock picking, but where do you think the best bets lie in terms of companies or sectors that are going to do well from the greening of the economy?
I would say don't focus in on one key area, and instead, I'm going to ask investors to change their focus a little bit. What I see so much in today's world is investors looking at the governments and asking, what are they going to do, and therefore, how should I invest? That's an okay way to do things, but remember that governments tend to be much slower than private capital. What's happening in the world today is private capital is moving very quickly, in fact, probably ahead of governments in a variety of these regards. So when you're doing your research and you're looking for investing categories that you might think are the next big thing in terms of ESG, think in terms of where the private capital is already heading and try to be along with that or even ahead of that versus watching the governments. I think that's the right thing to do.
Thanks so much for that. That was Mike Hanson, Senior Vice President of Research at Fisher Investments. Well, before I go, here are some of the top stories in this space. The hottest temperature ever recorded in Europe, scientists think, was measured on Wednesday in Syracuse in Sicily, 48.8 degrees Celsius or 119 Fahrenheit. It comes as wildfires rage around the Mediterranean basin. In Algeria, at least 65 people have been reported killed in some of the worst wildfires in the country's history. Siberia is also blanketed in smoke, raising fears of permafrost thawing and releasing carbon frozen in the tundra for centuries. Meanwhile, in the US, more than 150 million people were under some form of heat alert on Thursday, while the Dixie Fire continues to blaze northeast of San Francisco for the 27th day. It has grown to over 500,000 acres, nearly double the size it was last week, and is still only about 21% contained. Residents of the historic gold rush town of Greenville have lost everything.
Gone. It's gone. There's several times in the last week I've wished I could just go home, and then I remember you can't go home. There's nothing to go back to. Even if the house survived, like pretty much the rest of town is gone. There's no power. There's no water. Everything's gone.
And finally, if none of that's enough motivation to cut emissions, global heating could also drive up the price of chocolate. That's because 4 months of drought has scorched cocoa plantations in Cameroon. The country used to produce 250,000 tonnes of cocoa a year, but is struggling to harvest even half that this year. And that's your roundup of environmental ESG investing. I'm Elena Casas, and this is Reuters.